Good morning, Earth. It's Tuesday morning, April 1, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. The S&P 500 and the Nasdaq Composite posted on Monday the worst quarterly performances since 2022 as uncertainty around the Trump administration's economic aid agenda roiled US equity markets in the first quarter of 2025. For the quarter, the S&P 500 slumped 4.6%, while the Nasdaq Composite plummeted 10.5%. Dow Jones Industrial Average was not immune to the unease, slipping 1.3% in opening 3 months. The two benchmarks also suffered heavily in March, recording the biggest monthly percentage drop since December 2022, as President Donald Trump rolled out a swath of new tariffs, which raised fears of a global trade war that would hurt economic growth and spur inflation. Markets wrapped up March on a woeful note after a rough month and quarter beset by Trump's fast evolving tariff policy. Last week was the fifth in 6 weeks that the Nasdaq Composite and the S&P 500 ended the week in the red. The benchmark index is now down 4.5% to start the year, while the Nasdaq has lost over 10%, finishing the worst quarters since 2022. President Trump has set a deadline of Wednesday to announce sweeping tariffs. He has already imposed a range of import levies and is poised to introduce auto tariffs this week. Over the weekend, the president threatened tariffs on all of American trading partners, stoking fears among investors of a shock to the world economy. Trump said on Sunday that he expected tariffs he's set to announce will include all nations. He has already imposed tariffs on aluminum, steel, and autos, along with increased tariffs on goods from China. On Monday, both the S&P 500 and the Dow ended higher ahead of an eventful week for markets, bouncing back from the sharp losses early in the day. The tech-heavy Nasdaq closed down 0.1% to 17,299 points, while the S&P 500 recuperated losses as much as 1.7% to close up nearly 0.6% at 5,612. Dow Jones Industrial Average, we raised early morning losses to gain 1%, or about 400 points, to 42,002 points. Financial stocks helped boost the S&P 500 on Monday. Both Discover Financial Services and Capital One Financial advanced, up 7.5% and 3.3% respectively, as investors bet the merger would ultimately be approved by regulators. Drug maker shares slipped after reports the U.S. Food and Drug Administration's top vaccine official has been forced to resign. Moderna dropped 8.9%. Gene therapy companies, Taisha Gene Therapies and Solid Biosciences, fell 28% and 14.4% respectively. In deals news, Rocket Companies was down 7.4% after the mortgage lender said it agreed to a $9.4 billion acquisition of Mr. Cooper Group. The announcement, though, sent the mortgage services stock up 14.5%. While information technology and consumer discretionary, both sectors with heavy influence from big tech names, posted double-digit percentage declines for the quarter, a majority of the 11 S&P sectors were higher in the same period, led by energy's 9.3% increase. The S&P 500 Consumer Staples Index, often considered a safe haven within stock markets, was leading sector through which its 1.6% increase. Energy also rose, tracking a jump in crude prices. The Magnificent Seven technology names, which drove markets higher over a bull market which stretched through 23 and 24, weighed heavily on the U.S. equity markets as investors sold off growth names. Tesla was down almost 36% in the first quarter, and Nvidia dropped nearly 20%. The CBOE Volatility Index opens for a Wall Street so-called fear gauge jumped to a 2-week high at 22.28 points. As a result of tariff uncertainties, Goldman Sachs raised the probability of a U.S. recession to 35% from 20%, cut its year-end target for the S&P 500 5,700, and forecast more interest rate cuts by Federal Reserve. In yesterday's market, yields on the 10-year Treasury notes settled at 4.245%. Gold jumped, notching a record high, rising 1% to $3,115 an ounce. Bitcoin prices floated around $82,000. Focus this week will be on the economy data, including ISM business activity surveys. Investors are also looking ahead to the end of the week when a crucial non farm payrolls report will shine light on the state of the US economy. Also due this week are speeches from several US central bank officials, including Fed Chair Jerome Powell. My take: you would start with all countries, Trump said on Air Force One late Sunday, though he said the tariffs would be more generous than trade partners had been to the US. As trade wars worries mount in the run up to President Trump's tariff bonanza later in the week, the word we keep hearing the most these days is volatility and uncertainty. The market is looking for clarity, and it's not getting that at the moment. Investors, more or less in this first quarter, threw their hands in the air as one really cannot trade around this. Yet, the one big lesson from this first quarter is diversification is alive and kicking. So, whether one looks between or within asset classes, and if the perils of the market concentration is avoided, there's quite a bit out there in terms of individual stocks/slash sectors which are better versus some of the headline indexes. And that's the wrap for today, my dear viewers. And if you got value from this, please just subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I'll see you again tomorrow morning. In the meantime, happy investing. Stay inspired and remember, it's all about money.